Hey, I'd like to welcome you to another episode of the Mission Matters Money Podcast, your source for all things money. My name is Adam Torres. You can follow me on Instagram at AskAdamTorres. Keep up with my book releases, book tour schedule, signing, all that other good stuff. Always love to connect with you there. And as always, if you'd like to apply, become a co-author of one of my upcoming books, just head on over to the website, missionmatters.com, and click on Become an Author to apply. All right, so today I have Rob Sechrist on the line, and he is the president over at Pelorus Equity Group. Rob, welcome to the show.
Thanks, Adam. Thanks for having me.
So I'm excited to get into the Pelorus Fund and also the benefits of cannabis-focused mortgage REITs. And I'm curious to figure out how this financial product works. I mean, I was in the industry for a long time, but I can't claim that I've heard of a cannabis-focused mortgage REIT. So I'm excited to get into that. But before we do, give us a little bit more of an overall background on the Pelorus Equity Group in general. Tell us a little bit more about the company, please.
Sure. So Pelorus Equity Group is an asset-based lender that was formed in 2010. The principals of Pelorus have originated more than $1 billion worth of transactions. Our focus has been primarily value-add transactions that are fix and flip, ground-up construction, tenant improvements, things like that. And that's been our focus. And we basically, when the Rohrabacher-Blumenauer Amendment passed in 2014, that defunded the Department of Justice from any prosecution of any cannabis-related business in a medically licensed state, we decided to pivot to this sector, and we started originating cannabis transactions in 2016. Since that time, we've originated more than 32 transactions for a combined total of $65 million. And then we launched the fund in 2018, and we just are converting to the mortgage REIT this next month in 2020.
Man, that's exciting. And I just want to jump right in. So for the listeners, this is going to be a little bit more of a granular episode, so we're going to get into it. So you might want to listen to this one twice. But I just want to start out with, how does the Pelorus Fund get the benefits of a REIT?
Sure. So when you have an existing fund already in place, the way that you get the benefits of a REIT is you create a sub-REIT, and the fund fully owns that. So there's two directions to go. Either you start the fund brand new as a REIT structure, which obviously ours was already in place, or you create a sub-REIT. So the technical word is a sub-REIT, but to all of our investors, we are now a private mortgage REIT.
And so let's talk a little bit more about the underlying assets and what you're investing in. So give us a little bit more of that.
Sure. So the Pelorus Fund was created to be the first cannabis-focused debt fund in the industry. And it's ironic because when we started in 2018, all the investors were chasing equity, and nobody was interested in a 15% target yield. Today, that has vastly changed, and now we are the most sought-after asset class out there. And for many reasons. One is that traditional real estate funds are really being hit hard right now with the compression of yields and the increasing of costs for transactions. And now with the current events that are happening today, the days on markets are most likely going to continue to increase, whereas opposed to our fund is focused on income properties with cannabis tenants, and they are less affected, if at all, in a global recession, a national recession, or real estate cycle, because people continue to buy cannabis during those markets, especially medical and recreational type products.
And so I know you said you're coming up to launch the fund soon. What kind of response have you gotten for this? Because obviously you've had the fund before, but now you're changing the structure of it. So now you're going to have the REIT pass through. I mean, it's a little bit different than the direct ownership, right?
Yeah. So it's still a fund structure, and the fund will still remain in place. So what actually happens is that the fund will take advantage of this new tax structure, which is effectively a 20% tax savings off the top for any interest income that is derived by the fund. And so that is a massive increase. When you're an ultra high yield fund like ourselves, which our target is 15, we did 15.5 average for last year, and we did 20.4 for the last quarter. When you're that high of a yield fund, saving 20% is massive. And so we were able to go ahead and make this conversion now because the benefit was so great to our investors that theoretically you should add about 3 points in a rough calculations of saving 20% off the top to your net yield that your after tax yield. So that's really significant. And just to kind of hit some of the other benefits, that's for federal taxes, and for state taxes, the K-1s are issued for all the individual investors, and they're eligible to pay the income for the state income in the state that they're domiciled. And why that's important, if you're in one of those 7 states that there's no state taxes, Washington, Texas, Nevada, South Dakota, Florida, etc., you now have no income tax on our funds for the pass-through income. So these are some major things. What the response is that we're just about to release this. So by the time that this show hits the air, we'll probably be releasing it here, and it's the press releases are just about to go out. So we know it's going to be massive. It's a win-win situation. There's no downside. It also eliminates UBTI, which is a kind of a thorn in the side of all self-directed investors out there when a fund takes on any warehouse line or any type of leverage. We're not leveraged, but we will have a warehouse line. So we're just about to roll this out, and we went from quarterly distributions to monthly distributions. So we're trying to be as attractive as we possibly can for the retail investors out there, the mom and pop people that are accredited investors that are looking for an alternative in this unusual time. But this asset class is going to do well whether the traditional real estate market is doing well or not. And so we really kind of foresaw the shifting in markets, and we have been touting that to our investors prior to there being any global recession, but now it's going to be case tested through these next few quarters, and we already are checking the metrics with our borrowers and the dispensaries, and the market indicators are that first the sales spiked, but we believe that was because people are hoarding cannabis as well. But we ultimately believe that there will be no diminish in when it comes back down to the regular volumes of products being purchased.
No, I completely get that, and obviously it's an uncertain time in terms of the market overall, but you can see the way you're positioning this, and I love that you're making it accessible to other investors that maybe couldn't access this market in the past. Tell me a little bit more about liquidity and what you're expecting there.
Sure. So we believe, first of all, we doubled our assets under management in just this last quarter.
Whoa! Congratulations! That's amazing. Let's not just skip over that one like that's not a big deal, Rob. That's a freaking big deal. Congrats.
Well, it's tough in this. It was hard to get things going. It took us a long time to get our assets under management up over 10 million, and now the velocity has really started to take off. So we believe that we'll double again in Q2, and that's compounded by not only the changing to the private mortgage REIT structure, but now we have engaged with broker-dealer, all kinds of other avenues. And we've also really focused on doing an organic campaign where we are launching our own YouTube channel where it has at least 20 assets that are created, many questions or interview questions for me, showing me at trade shows and conferences across the country, including being at the Benzinga event with Tim Seymour as the moderator, who's from Fast Money on CNBC, and several other billion-dollar funds and us, and showing that story. But also, we will have videos of our facilities that we lend on, so people can really see what these actually are. And it's really important to see that because most people don't understand how different cannabis real estate is from traditional real estate. And that's where we lose traditional real estate investors when we're explaining to them that cannabis is different. They just don't understand it because I can say the words, but they don't understand how massive the tenant improvements are for a property that can do millions of dollars a month as opposed to a non-cannabis property that would do hundreds of thousands of dollars a month.
Yes, it's a huge difference when you're thinking square foot, when you think of the value add, it's night and day. Obviously, as this space gains more maturity, I think at some point you would expect, and I don't think we're anywhere near that. At some point you would expect there to be pressure on margins and other things like that. But for now, some of the people that are benefiting from this on the early side of things, it's like, a little bit more risk because some things are not known, right? But if you think about it from the angle of what you're doing with spreading out the risk through a REIT, it makes sense.
Yeah. So just to kind of talk about the risk and so the things that we don't know, we're still only lending on commercial properties with guarantors, corporate or personal guarantees from the sponsors, and verifying the credit worthiness of the tenants that are cannabis related. So from that perspective, there is no additional risk. Where the additional risk comes in is with the compliance or the unknown things, and one of those scenarios was the vape crisis. And so those are places that things could have some type of black swan event for a certain period of time or for a geographic area. But we do lend across the country in all 33 medically licensed states, and we don't believe that there would be anything that would significantly impact the entire portfolio at one time, and that could happen to any asset class.
Yeah.
So we are an emerging asset class, so there are some potential additional risks, but we're also very conservative on how we do everything here, and we mitigate those risks with doing lower LTVs, 50 to 60%. We have the borrowers coming in with as much as 50% cash for loan to cost, so 50% loan to cost on some of the transactions. And the personal guarantees or corporate guarantees, when they're strong enough, are very important to mitigating those risks. And by the way, we're getting sponsors that we would never get in our traditional asset-based lending that we had before, because these sponsors have no other place to go other than us. And so that is something that people don't know. They disassociate, or they think that because the yield is so high for our fund that there's additional risk, and that's not it. It's the dislocation of the markets. It's our average note rate right now is 15.17 for the portfolio, and the yield is higher than that because we're sharing so much in fees from the manager or the GP with the LPs that in this last quarter, of that 20.4%, 5% of that came from my partner and I, the co-managers of the fund, sharing revenues from our side.
Wow, that's amazing. And yeah, I guess risk-wise, I'd say political risk is real. I guess that's a textbook term for what it could be, is like political risk. And you think about emerging markets like way back in the day when we were just kind of getting started with equities abroad and how they're going to be on the exchanges here. You would think about like things like that. But I get it. And the difference here really is that there's the real estate and what's backing it. So no, all great stuff there, Rob. So Rob, if somebody's listening to this and they want more information on Pelorus Equity Group or the Pelorus Fund, what's the best way for them to reach out or to learn more?
They can go to our website and look at anything on there, and that's pelorusequitygroup.com, and that's www.pelorus, and the word equity, and the word group spelled out .com. Or they can just simply email info@pelorusequitygroup.com, and that's again spelled Pelorus, and just request more information, and we're happy to provide more information and get you on our distribution list.
Fantastic. Well, hey, Rob, been great having you back on the show, and love to hear all the success and all the great things you're doing for all your investors and also for the people whom you're helping with their real estate. So thank you for that. And to the audience, as always, thank you for tuning in. Hope you got a lot of value out of this. If you did, don't forget to subscribe to the podcast, leave me a review on the Apple iTunes Store. If you are watching this on our YouTube channel, Mission Matters Money, definitely give us a subscribe there and leave us some comments in the comment section. Love to know what you're working on and what you have going on in your end of the world. And Rob, thanks again for coming back on the show.